Welcome back to Macroscope. In this video, we'll break down the most important macroeconomic data released last week across the US, UK, Eurozone, Japan, and China. We'll explore inflation, employment, and business activity trends, and what they signal for the global economy and markets. Let's dive in. This week's highlights: US. Strong jobs data remains strong, and its inflation looks steady. Eurozone. Retail sales fall and Germany's trade deficit grows. UK. Second month of GDP contraction. China. Deflation persists with falling inflation and PPI numbers. Starting with growth and industrial production data. The UK had 4 major data releases with misses against forecast in 3 of these. Manufacturing production and industrial production showed weak results for June, and month-on-month GDP growth was lower than forecasted. The Eurozone had 2 data releases, with an important beat in the industrial production versus the forecast, and up on the prior data. So the takeaways: German industrials are showing signs of stabilization. However, the UK continues to show weakness in both manufacturing and industrial production. Next, onto employment. In the US, initial jobless claims came in at 227,000 for the week, which is better than the expected 235,000. This reflects a relatively healthy labour market, with fewer people filing for unemployment than expected. Despite recent challenges, the US job market continues to show resilience. Up next is inflation. In China, there were 3 inflation data releases, of which 2 missed forecast, PPI and month-on-month inflation, and 2 beat prior data releases. Of the Eurozone's 2 releases, both met or beat both forecast and prior readings. While in the UK, of the 3 house price data releases, all met or beat the forecast, continuing to show softness, with prices flat month over month. So takeaway on inflation is China is seeing deflationary pressures as a bigger threat at this time, while in the UK and Eurozone inflation data is warming slightly but remains controlled. Finally, onto trading activity, an important category that highlights international trade balances and economic relationships between countries. Sterling weaken in the Eurozone. The balance of trade in Germany and France both missed the forecast and the prior data release. In addition, exports in Germany for June saw a decline of -1.4%, which was worse than the forecasted. In the UK, the goods trade balance showed a deficit of -£21.68 billion for June, which is a slight improvement from the previous -£22.42 billion. However, this still points to a large ongoing trade deficit. The non-EU trade balance also showed improvement, narrowing to -£9.31 billion. So takeaway is the trade deficits for Germany and France widen as exports decline. In the UK, even with improvements, external position remains vulnerable. Let's summarize the global picture. Zooming out, here's what the latest data tells us. Jobs. The US jobs are resilient inflation, stable in Europe and the UK, but deflation pressures in China, industrial production, Germany showing signs of stabilization, the UK weakness continues. Trade. Deficits in the EU and UK growing. So what are some of the implications of last week's data? And as a macroeconomic investor, how could you play this? In the UK, production and GDP are showing broad weakness. While in Germany, industrial production may have rebounded, however, retail sales in the Eurozone only met the low expectations, signalling flat consumer demand. Together with weaker exports in Germany, this would indicate that the strength in the Eurozone has not been confirmed. This could lead to new pressures on EU manufacturers and further slowdown in Germany and EU GDP growth. The implications for the UK growth continue to disappoint, weighing on GBP and increasing the dovish BOE bias. the UK manufacturing is still fragile. Even with improvements, external trading position remains vulnerable, which is bad for long-term GBP outlook. Trades to consider: long USD versus GBP, or long JPY versus GBP, based on macro divergence plus external strengths. Subscribe for more macro updates and drop your questions below. Thanks for watching, stay informed, and see you next week.